Okay, guys. So, like we said, today we're going to be walking through an introduction to trading. We're going to really focus around the fundamentals of Forex and what it means to um, forging the habits of a successful trader. And then we're going to touch on some of the key fundamentals when it comes to trading news. Okay, so we're going through a bit today. So hopefully we can get through all of it in the next 45 minutes. So, first off, let's think about money, right? The fact that we can even be making money during this crisis, during this pandemic, during this environment that we're in right now is a huge blessing, all right? So what we're embarking on in terms of learning this skill, you're truly allowing yourself to be indifferent to whatever's happening in the market. It's an absolute winning strategy. And actually when you look at the cash flow quadrant, you're kind of moving, inadvertently, you're moving from the mindset of an employee or a self-employed person where you're exchanging your time for money, and now thinking, how can I create a system for myself and build my assets in that way? Using skills and knowledge around the trading Forex. Okay? And this is the thing, there are multiple different ways in which you can make an additional stream of income. But why do people choose Forex? Or why is it that some people will choose Forex and others will look at Forex or look at trading and think it's a scam or think it's not open to them? Well, with everything, there's always those people who will first ignore you. They will laugh at you. They'll say, I don't know why you even decided to even try and do this. They will laugh at you. They'll even tell you you've gone crazy, everything. But watch, because sooner or later they will turn around and say to you, oh, okay, you know what, that thing you was talking about, trading, yeah, you can help me. And this is exactly what happened with Bitcoin. When Bitcoin was introduced, in fact, when Bitcoin came about, I remember working in one of the largest investment banks in the world, and the conversations that was being had when Bitcoin got introduced, investment banks didn't like it because it's not regulated as the same as other financial instruments, and they felt that there was a loophole and that it was only going to be used for crime. And a lot of people called it scams, etc. Now most of your major companies like Wikipedia accepts Bitcoin. So it's all about timing. And where you are right now, you're at the beginning of your journey towards financial freedom through learning this skill. But you have to give yourself time. You can't have just started a week ago and expect to be a millionaire, And a lot of people have that expectation. A lot of people are thinking, well, I want to get that next big win, and I'm going to dump all my money on Bitcoin because everyone's talking about this halving, or I'm going to, put all my money on gold because everyone's talking about gold, without doing your due diligence, without learning the skill. And then when you don't make a million in that one trade, you think, oh my God, I knew it. This wasn't going to work. It's a scam. It's ridiculous. But the reality is this, the biggest risk a person can do is do nothing, right? So the fact that you guys are saying that you are wanting to learn this skill, you are doing something. And during this pandemic, we're seeing that transfer of wealth happening. And those who are not doing anything are going to be watching retrospectively and thinking, oh, what could I have done differently? But those who are taking action now, like yourselves, you're looking at this in a completely different level field, right? So let's talk about trading. Let's try and demystify some of the Forex myths, and let's kind of make it real simple, real easy to understand. So Forex, for most of you should know this, Forex is foreign exchange of currencies, right? So you're either, when you have a currency, it's either bought and sold simultaneously. That's why it's quoted in pairs, right? So for example, Euro USD, that means you're buying Euro and you're selling USD, or you're selling Euro and you're buying USD, right? It's a simultaneous relationship happening at the same time. So Forex market being the largest financial industry industry in the market, And there's so many benefits with Forex. And I'm not going to go through this too much, but ultimately there's money to be made with Forex, minimum risk. If you manage your risk accordingly, it's high liquidity, meaning you can make a lot of money, and you have the benefits of having leverage, meaning that you can use other people's money to make you money, right? So who are the key players in Forex? I think it's important to know who the key players are, because they drive a lot of the movements that we see in the Forex market. Guys, if you're still following me, tell me if I'm going too fast or I'm going too slow. If everything so far that I've said makes sense, can I get some like number twos in the group chat? Make sure that everyone is comfortable so far with what I'm talking about. To be honest, I'm really just getting into the meat of it now. Okay, fantastic. Cool. So the main participants of Forex market, right? We'll start off with traders. For us, we are deemed as retail traders, okay? So for us, we're everyday people who will trade typically through a broker. So we will not be able to have access to the financial markets on our own accord. That's why we are retail traders, right? Then you have central banks and government. So central banks will govern your interest rates, will govern certain global economic goals for the country with the government, right? And those choices and decisions that they make impact the market, and therefore impact prices of currency pairs, and therefore impacts your trading as a retailer. Private banks and investment hedge funds are all what you call market makers. So these are institutions that will be able to move markets up or down. They have the power to move markets simply through volume, sheer volume, right? And then you've got companies and corporations that play a longer term goal in terms of protecting their profits against the fluctuations in currencies by hedging the activities with strategic methods. So when we talk about hedging, we're talking about, okay, if they're going to buy USD, they're going to sell gold, because then they offset each other, that type thing, right? But the reason why I wanted to highlight the different places, because everyone plays a role. Everyone plays a role when it comes to trading in the market. And when you understand the roles that each of these different pillars play, then you'll understand why certain things happen in the market. Like, for example, you think when a piece of news comes out that central banks are increasing interest rates, and you see a shift in price, then you'll understand why, because you'll understand the magnitude of that player in the market, okay? So this is a really, really simple indication of what trading is, but it is something that is literally like I'll say the cornerstone of trading, okay? Just like Adam and Eve were the first in the Bible to be spoken about, this right here, what I'm about to say, is the most important thing when it comes to trading, right? You want to buy low and sell high, okay? You want to buy low and sell high. That's it. That's all what trading is. You're buying at the lowest possible point when you expect price to rise, and then you're selling at a lower possible point when you expect price, higher possible point when you expect price to fall. Okay, that's it. That's what trading is. Simple. It can be done now. That was the end of your lesson today. I'm joking. But yeah, buy low, sell high. Okay. I'm just gonna drill that in your head, because you're gonna find that a lot of your strategies, when you start learning your trading strategies, when you start coming into your own, these basic fundamental principles will always underline those strategies. So, okay, we're going to go in for a retest. You want to go in at the lowest possible point if you're going in for a buy on a retest. Oh, okay, I see a double top. Okay, you still want to go in at the highest possible point in order to sell. So buy low, sell high. And let's take it back to can, well, I can relate it to in terms of real life stuff. So I'm a bit of a cheapskate. So whenever I see something really, really nice and I know it's a bit on the expensive side, I'm going to see it if I can wait it out until the summer sales, because then I know that price is going to drop, and then I can go and buy it at that price. So I'm going to wait until price drops for me to buy it. Why? Because I know that even though the price of that item will drop because it's summer sales, yeah, doesn't mean that the value of that product, so say if someone buys some Louboutin shoes, right? Okay, they don't really do sales, but Louboutin shoes sell, I go in, I get my 20% discount, I buy at a cheaper rate. Does not mean that the value of those shoes are less. I could then decide one day, do you know what? I'm going to sell those shoes at the higher price. And the difference, I make money. It's the same principle when it comes to trading. You want to buy at the lowest price, so you're going to wait until that summer sale to get that lower price, right? But then when it comes to selling it, you want to make your money, you're going to sell at the highest possible price, right? So that's exactly what it comes to with trading. Now, if that makes sense to everyone, can I get some number 5s in the group? I like interaction. You know, I like to know that I'm not going off in the wind and people are following me. Fantastic. Okay, cool. So what makes up a winning strategy when it comes to trading? So one of the things that is missing here is discipline. It's actually probably the most important thing. That was my fault. My apologies. But yeah, discipline is so key. You need to be so disciplined when it comes to trading. You have to have a plan. And that's, you know, the forging of a winning strategy. Understand what your confirmations are. When I talk about confirmations, I'm talking about things you are looking for in the market that determines for you that it's a good setup. Okay, you know, and you have to test it out, trial and error. You have to test out this strategy, back test it at least 100 times to see, or look back at the chart and see, every time you see these 3 confirmations, has price mostly done the thing that you think it's expecting to do. So say, for example, I say, okay, I'm going to give you an example. Let me annotate. Okay, so say, for example, I say that whenever I see a double top and I see a long wick, right, this is an indication of a buy. I mean, a sell. I'm going to sell here and I'm going to make my profits because I'm expecting it to drop to this point. All right. Now, if I say that, okay, I've seen this happen 100 times on this pair, it respects this double top, and whenever there's a wick as well, always happens, and then I always see a sell happen, then that is me back testing this strategy. All right. And my confirmations are, do I see a double top? Do I see a wick at the top of the second top? Great, then let me go in. Those are my confirmations. Cool. Now, with trading, you're never ever gonna know. We're not future. We can't tell the future. All right. So we cannot be whisperers or Forex whisperers. We can't tell the future, right? So nothing's ever guaranteed when it comes to trading. However, we should be consistent in terms of the win ratio. You want to be winning more than you're losing. Or if you're going to lose more than you're winning, you want to manage your risk accordingly so that even if you have more losses than wins, you still make money. All right. So let me give this example to you. Right. Let's say, let me draw out a chart. Okay, that was a really ugly line. Sorry. Let me draw out a chart. Okay, so that's a bad trade. That's a bad trade. That's a bad trade. Okay. All right. Okay. Cool. So imagine that the red arrows down indicate that you've lost trades, right? So you have more red arrows down, right? You've got 1, 2, 3, 4, 5, 6, 7. You've lost trades and won only 3 trades. But if you are able to manage your risk accordingly and cut your losses early, right, on these losing trades, okay, even though you've lost 8 times, it's cool, because actually the 3 times that you won big. So your win ratio is still high. Does that make sense to you guys? Is that making sense? So it's all about having a strategy that you know will work and get you the results in terms of your ratios. In terms of, okay, cool, if I only win 3 to 8 times, those 3 times are going to be big wins as opposed to the 8 times that I lose. Okay. And you got to think about your suitability. You know, a lot of people are very different. We've got different things going on. Like Denise is driving right now. It's like 11 something p.m. I'm not driving, I'm at home. But everyone has different work styles, lifestyles, different time zones, etc. So you need to figure out whether a strategy is suitable to you and your lifestyle, okay, before deciding to take that on. So yeah, the features that make up a good winning strategy are so. Now, this is one of my favorite quotes. So I'm just I put it in here as a reminder. Now, the key to trading success is emotional discipline. If intelligence was the key, there would be a lot more people making money trading. Now, who can tell me the percentage of people, of retail traders that make money trading? Out of 100%, how much percentage of traders, retail traders, make money from trading? Give me some wild guesses.
65%.
65%. Okay. Optimistic. Anyone else? Anyone else want to guess how much percentage?
50%.
50%. Cool. I'm gonna take you out of your misery, guys.
I think
95% of traders, retail traders, fail. 95. 5% of retail traders win, and 95% of
you say 95 fail?
Yeah, fail. 95% of retail traders fail. Now, the reason why is because they do not understand, or most traders that come into trading fail to understand the importance of mindset and discipline in relation to skill. You know? And that's why I love this quote, because this quote rounds it up so beautifully. You know, because you could be the smartest person, the most technical analysis, your charts could be shining with so many like lines and fibs and all of the other tools out there. But if you are not disciplined, if you are not sticking to a strategy, if you are not emotionally managing yourself to not be trading recklessly, you will not make money. And so what this re-emphasizes, the people who are able to, and this is why it's all important to really understand the habits of a successful trader, right? Because the people who are able to become successful traders are the ones who've had to learn and wire their mindsets to be disciplined when it comes to trading, okay? So I don't want to scare you guys, but we're in good hands. You know, we're lucky because not a lot of traders, again, have a support system and education platform that we do with Peak. You know, the education that we have here is phenomenal. You have a wide range of educators as well who are teaching you so you don't have to fall in the same pitfalls that they would have done in their journey. Not to say you're not going to lose. Everyone loses. I lose all the time. But it's about forging the habits early so that it becomes part of your everyday when it comes to trading. So let's talk about the habits of a successful trader. Now, wealthy traders are patient with winning trades and impatient with losing trades. All right. I'm going to say that again. Wealthy traders are patient with winning trades and impatient with losing trades. The amount of times I've heard people say, oh, I'm going to, I know I'm losing right now. I know it's going to turn around. So I'm just going to wait and wait and wait. And 100 pips later, it's still not turned around. And then you're like, oh my God, I've lost too much money. I need to come out. So with me now, if I have seen all my confirmations and I've followed my rules, then fine, I will stay and be patient with a winning trade. But if I've gone into that trade and there was an inkling that says to me, this trade, I don't think this trade is a good one, right? I'm not going to waste time. I wouldn't even go into it. All right? Now, the second habit is that they know that making money is more important than being right. Okay, now what do I mean by that? Now with trading, you know, everyone has an opinion. Oh, I think price is going to go up. Oh, I think it's going to go down. Oh, it's consolidating. No, it's in this area. It's in this. Everyone has an opinion, right? And everyone wants. It's our human nature to want to be right. Like, I don't know about you guys, but have you ever played Articulate? Has anyone played the game Articulate before? I'm sure they have that in Canada as well. Really, really competitive game. Where you have to, I mean, it says it in the name, articulate the word in question, but without saying the word or sounding it out. And the amount of times I've gone into, like, when I'm playing it on games night, and it's caused so much arguments because somebody said, oh, you said something that could be deemed as this, or you said something that only that one person can understand. It's just so funny because they want to be right so bad that they don't care if they lose the game, right? With trading, they don't care if they're right. They rather let the market dictate to them whether they're right or wrong. If they're wrong, they understand that quickly and therefore adjust themselves quicker. All right, wealthy traders look at charts to see where regular traders are lining up in specific zones. So what I mean by this is that with wealthy traders, you know, you're looking at the charts and you're seeing the support and resistance zones. You're seeing the zones where every trader, every retailer is looking at the same chart that they're seeing and thinking, this is going to be an area of support. It's going to bounce off this line and I'm going to go in for a buy. So everyone's lining up waiting for that perfect entry. So with wealthy traders, what they do, instead of looking at the charts as support and resistance zones, they look at the charts to see where they anticipate other traders will be going into that trade, which is a really interesting way of looking at trading, because then now it's not you against yourself, it's you with other traders, and understanding that as momentum grows and there's a lot of volume in the market and you're trading, that is better overall for you as a trader. Okay, wealthy traders know exactly when they will exit a trade for a loss or profit. How many of you have gone into a trade to be like, I'm just gonna see how it goes. I'm just gonna leave it. I'm gonna see how it goes. I'm just trailing it. I'm just doing my thing.
In my demo account.
Yeah, I am renowned with doing this. I still do it to this day. I'm not gonna lie to you guys. I like to trail my stop loss and not have an actual TP in mind. Like, I will have a TP all the time. I will have a TP in mind, but in reality, in my head, I'm thinking, if it gets close to that TP, I'm going to take that TP out and I'm going to keep on trading my stop loss in profit. That's my thought process. But the reality is, wealthy traders know exactly when they're going to be coming out that trade, whether in profit or loss. Now, where I would say the emphasis for me is on this particular point is on the loss. If you can manage how much you lose and minimize how much you lose, then you're securing your bag. Okay, you are keeping more profits than you are losing. So wealthy traders approach trades number 5 with the same mindset than the previous 4 trades. They trade with the trend, right? So have you ever had a losing streak and you're thinking, like I thought I knew it. I saw all my confirmations. It made sense when I went into it. There's 1, 2, 3, 4 times. Each of those 4 trades were losing trades. And then the 5th trade comes, you're like, is this gonna do me again? Like, you start questioning yourself. You start questioning your confirmations and you hesitate. And then the time that you hesitate, that trade number 5 is the one that's going to be beauty and you've missed it. Has that ever happened to someone before? That's happened to you. Mention it in the group chat. That's happened to me a few times with one particular currency pair. But the reality is this, and it takes practice. It really does, because it's like when people say no to you constantly, and then you have to keep that same energy, because you cannot go to a prospect expecting them to say no to you. You have to keep that same energy. It's the same with trading. If you have a losing streak and you lose a few times, you cannot be entering trades, or you shouldn't be entering trades rather, thinking that you're going to lose. You should rather continue to have that winning mindset. And it's easier said than done. It really, really is. It really is. I find that having positive affirmations in the morning as part of your routine and making sure you're in a good state of mind to trade is highly, highly effective to ensuring that your mood stays positive regardless of what's happened before. You know, and that's a really, really important part of trading. You know, trading is not just the doing, it's everything. You know, if you treat your trading as a business, you know, how do you trade? When do you trade? What time of day do you trade? You know, you will see much more differences. Like, for example, with me, I know there's particular times in the day that I like to trade. I like to trade around, well, during pandemic, I like to trade around 6:30 a.m. London time, and then again around 2 p.m. London time, because those are where the overlaps are in terms of market entry, market time zones. But for me, I know I need to listen to my music in the morning. I need to have my peppermint tea. I need to obviously have my shower and all that stuff. I need to be in a good mood before I can go and trade, or I'm just going to go into trading frustrated and probably make unnecessary calls. So having a routine, I call it having a winning routine. You know, having a routine is important because it then means that even if you're on a losing streak, you know, it's fine. You're good. Why? Because you've got a routine. So wealthy traders use naked charts and focus on zones. Now, I put this in here, and I guess I would say that there's 2 schools of thoughts, right? Personally, I'm a naked trader. So what that means is that I tend to just look at the charts and make decisions based on the candlesticks, as opposed to using tools such as like you know, cloud analysis, Fibonacci's, RSI, etc., etc. I tend to just focus on what I can see with the naked eye. Now, not to say that these tools are not effective, because they are, but I do think that using multiple different tools can cloud the picture. Because if you understand the origins of these tools, then you will understand why it's a little bit redundant, okay, at times, okay? So, for example, all tools, nothing can tell the future, right? Nothing can tell the future. So all tools are written, coded, based on past facts, what has already happened. And your goal as a trader, you're trying to anticipate what is going to happen. Okay, so if you're using tools that is showing you what has already happened, and you're trying to use that to tell you what is going to happen, not to say it doesn't work, but if you're using multiple different tools try and determine something that's going to happen and it hasn't happened, it's already happened, yeah, you're better off just looking at price in its live action, you know? Because price at live action, the candlesticks tell a story. Wicks, bodies of the candles, the wicks, the movements, the trends, they all tell a story, you know? And it's better. So for me personally, and a lot of wealthy traders, they do this, they use naked charts and focus on those zones, focus on areas of support, areas of resistance, focus on you following the trend and just looking at what the candlesticks are telling them, as opposed to, let me just throw one Mitsubishi cloud because it sounds cool, some alligator thing, and yeah, I'm just gonna throw everything at my chart, and then by the end of it, you can't even see the price. You can't even see the price chart, the price candles, because you've got all these charts and indicators. Just don't be an indicator whore. Okay. So wealthy traders know, being uncomfortable is okay. Be comfortable with being uncomfortable. You're not expected to be experts, You're gonna get to a master level, but this takes time. I've been trading myself for 2.5 years now. So it takes time, but you have to be comfortable with knowing that you don't have the answers. You don't need to have the answers, right? Like you've got to be comfortable with that. And by being comfortable with that, guess what? You open yourself up to be more coachable, to learn, to review things and be like, okay, that didn't work. Let me see why that didn't work. Okay, next time I'll know that. All right. So it's really cool to just be comfortable with not being comfortable. Cool. So wealthy traders know that they have a right to be in the market. Let me tell you one story. Story time. So, and I'll tell you an interesting story. So, like I mentioned before, my background is in investment banking. So I worked for one of the biggest investment banks in America, but in the UK. And I was in trade support, so middle office. But I had loads of friends who were traders or who were in research and front office roles. And I remember one of my good friends, and I don't know if in hindsight, he probably just did this to just, push a button. But anyways, I remember one of my good friends his brain is one of those brains like Einstein. He's so smart, right? And I remember when I first started thinking about trading, I was like, I'm thinking I wanted to learn the skill. And I remember we was at gathering and I told him, and I was talking in a group and people were asking what we doing in the summer, blah, blah, blah. And I was like, yeah, I've been looking into wanting to learn the skill. And he turned around to me, no word of a lie, he turned around to me and said, what makes you think that you, Jennifer, can trade and compete with the big investment banks? He made me feel so small and so silly to think that this market was accessible to someone like me. And I will never forget that feeling, because that made me feel like, okay, I'm a Taurus, I'm very, very stubborn. So I was like, okay, no problem. I didn't say anything. And we have a trading group, a WhatsApp group where somebody created a community WhatsApp group for traders in the UK. I've been in that trading group since 2018. I hardly ever spoke. In fact, I never spoke until this year, right? This person is also in that trading group, the same person that said to me, who do you think you are to think you can be trading with the likes of investment banks? You're not a trader, you're not this, you're not an institution, you don't have the money like an institution has. What makes you think that you can make money? Nah, just don't do it. You're wasting your money. It's a scam, this, that, and the other. Oh my goodness. And he's in the same group as me. Now, obviously, as time goes on, I just been quietly, I didn't really tell most of my friends. Some of my friends knew, but those guys who were doubting me, I just didn't say anything. Learning how to trade, getting better at it. And then this year, I've been very, very confident. My confidence level is like, So all of a sudden I start talking in that group, and then someone's talking about my baby, which is DAX. You know, it's an index that I trade. And someone asks this question, and they're like, oh, they're going in for a sell. And I look at it and I go, I think he's going to buy. The same person that ridiculed me went to me, asked the question, can you please elaborate or explain, provide some evidence to why? And obviously I've never spoken, so they're thinking, who's this new person who's all of a sudden just, you know, talking? I did everything, and lo and behold, the trade went the way I said. And since then, I got like my seal of approval. Everybody was cool. And it was so funny because now that same person who mocked me, fully mocked me, is now like receptive to my opinions on trading. It's crazy how the world works. So that was a really, really long story just to tell you that everybody deserves to be a trader. Do not ever, ever let your shine come down, because what you are doing, not a lot of people have the ability or strength to even say, I want to do this. All right. So you guys have every single right to be in the market. And as a wealthy trader, you need to have that confidence. All right. Okay. So wealthy traders never add to a losing trade. Oh, another scenario. Oh, today we're really hurting. We're really putting some salt in some wounds today, aren't we? So, have you ever been in a situation where you're in a trade and it's in a retracement? So it's going. So say for example you're in a buy, and then all of a sudden you see a sell candle form, and you're like, well, it's going to retrace, and then it's going to keep on going the direction that you're going to go. So you're thinking, well, seeing as it's gone down, let me get in again at a lower entry point. Even though it's losing, this is a losing trade. You're like, I'm still going to go in again because maybe it will return back. Wealthy traders do not do that. They never add to a losing trade. If you've got a losing trade, why are you opening another position? She's going to lose again. They never do that. And finally, wealthy traders make following the rules their goal instead of the money. Okay. Now, when it comes to trading, a lot of people think that they have to set themselves targets. I need to make $100 tomorrow. That's it. Like, that's my target. I'm making $100 tomorrow, and if I don't make that $100, then I haven't met my target. Now, if you are doing that, you know, trading towards a financial goal, most times the night it's going to be difficult to achieve. You know, for me personally, I set myself targets in pips as opposed to, you know, monetary targets. And obviously, you know, I calculate what the pips would be in monetary sense. But the point is that I focus on my strategy. If I don't see a good trading strategy, I mean, a good entry for my trading strategy, then I'm not going to go in. I'm just not, it's not worth it. Especially when you've built your account to a certain level, it's just not worth risking it. And I think the bigger my account gets, the more I'm like, yeah, I'm more picky with the choices of trades I do. I'm not going to go into a trade unless it's going to give me minimum of 50, 60 pips. You know, 5, 10 pips are great, but personally, I'm more of I want to catch the big pie, right? So yeah, these are all habits of a successful trader. Now, be honest with yourselves. Do you think you are currently thinking in a mindset of a wealthy trader right now? If you are, give me some number 7s in the group chat. If you're not, give me some number 5s.
Can you repeat the question again? Sorry.
Do you think you're currently thinking in the mindset of a successful trader? Based on what you've learned now in terms of the habits of a successful trader, do you think you are emulating this already? Okay, cool. And that's okay. You know, it's good to know now than later. You know, now that you know, it's all about how do you now put this into practice, okay? And there's little things that you can do to put this into practice. The first thing is to set yourself a plan, set yourself a target, you know? figure out what strategy you want to focus on. There is so much information out there. You don't need to be the jack of all trades. You need to figure out what works for you and what style of trader you want to be. But yeah, cool. Now I'm going to talk about fundamentals. Fundamentals first of all, do people understand what fundamental means? Fundamental, just a high level. Essentially, you're looking at the news. This is when you're watching the news. And what does the news show us? The news tells us about what's happening in terms of economics in the market, right? Now, anyone who ever studied economics, primary principles of economics, it's all based around supply and demand. Okay, the same concept works with trading Forex. Now, when you're trading Forex, what you're trading is price movement, pip is percentage in price movement. So the thing that impacts price is what we call fundamentals, okay? So supply and demand will impact the price of a currency. If a currency is in more supply, then, it's a decent, if a currency is in more demand, then it will go up in price. If it's in less demand but high supply, then it's going to go down in value, right? So price is the variable in which all of these different elements of fundamental economics impact. And I'm just going to walk through. I just put some of the key. This is not an exhaustive list, but I put some of the key economic variables that you would typically hear about when you're watching or listening to the news. So this is just to help you kind of navigate the news. Okay, so unemployment rates. When people talk about unemployment rates, if an economy has high unemployment, then it means that not a lot of people are buying goods or making goods. So therefore, the economy is not at the most optimal place. So therefore, the value of that currency and that economy goes down. Right? So higher unemployment, you'll see lower rates. And this is what we're seeing on the US dollar. Okay. This pandemic has caused over 45% of Americans to be unemployed and seeking government support. And that's why since this pandemic has, come about, the average of the dollar DXY index has literally been on the massive downturn. Prices just dropping and dropping and dropping. The dollar is just dropping because of the high unemployment rates. Interest rates, this makes the higher your interest rates, this makes it more favorable to save money, right? So if people are saving money, that means they're not spending money, they're not feeding into the GDP of the economy, and therefore price goes down. Okay, GDP, gross domestic product. Now this is a measurement of all of the money being made in the economy, right? Based on the people getting paid for employment, for manufacturing goods, etc. All feeds into the GDP of that country. Now, the more people you have employed, the more people you have in the workplace that are working and contributing to taxes, etc., making money, that makes your GDP go up. That makes the value of your currency go up. So if GDP is up, is rising, that's really good for that economy. And therefore the price of that currency, say for example, it's the dollar rate, the price of the dollar goes up. Now, all those three, if you understand what I've just covered in terms of unemployment, interest rates, and GDP, can I get some number fives? No, wait,
Yes,
let me.
yes.
Okay, perfect. All right, cool. Retail sales, again, similar concept. If people got money, they're going to spend money, and therefore going to drive up retail sales. Oh, I've got it there twice, sorry. And when retail sales go up, that's fantastic. It means that you've got a flourishing economy. Inflation indicates that things are getting a bit too expensive. Prices are getting a bit too high, and therefore may indicate that either there's a need for governments or central banks to step in to curb the inflation through quantitative easing. And when we say quantitative easing, it means they print money. It just prints some money, put into circulation, and therefore reduces that inflation. Or it's an indication that people are not going to be able to buy as much for their pound or their dollar. So therefore, you know, it could go either way. So if you're hearing higher inflation, it could be a case where you may see an initial, downturn in price because, you will see an initial downturn in terms of a Forex price because people aren't able to buy as much, but then you may see a government response in terms of using quantitative easing, and therefore, cool, it balances out. So inflation is a bit of an interesting one because usually it's like you end up seeing a whipsaw in the market, the up and down sentiments, which leads me nicely to sentiments. Sentiments is people's feelings. You can't really determine how someone's going to feel about something, but you know, I'll give you an example. When Trump opens his mouth, a lot of people have different sentiments. Even if it's positive news or exasperated news or negative news, it always has, how do people feel about it? Even if it's supposed to be positive news, how do they actually feel about it will make them hesitant. For example, there was news about coronavirus cases being, had reduced, and that they had, they had found methods to curb the spread of coronavirus. This I'm talking about in the States. That type of news, typically sentiments-wise, should give you a good positive feeling. It makes you think, okay, cool, markets are coming up and up. But actually, it gave a very, very different feeling because people didn't feel confident in what was being told in the press by the president and his aides. So sentiments play a massive role in terms of how it impacts the market. Politics, if anytime it's a general election or someone's running for office, there's going to be different sentiments because people attach certain beliefs to different types of parties. So, for example, in the UK, you've got Conservative Party, Labour Party. Labour Party is all about sharing the load, as you say, and taxing the rich more. So that has a different sentiment to the Conservative, who are more about protecting businesses, etc. And then world events, the pandemic is a world event. Global warming is a world event. These things have a massive impact to the markets, as we saw at the beginning of this coronavirus. So that is it. That is fundamentals of trading. I think that is it. That is fundamentals of trading. That is pretty much the end of this session. So I guess to wrap it up, I would always say with anything you do, know why you're doing it. So why you want to learn this skill. Know why, have that in the back of your mind, know what your why is. And at the same time, also be open-minded. When you are learning something new, it can be a little bit weird because you might have to look at something in a more obstructive way than you would typically look at it. But you have to be open-minded to it. I remember one person I was teaching about trading, and they couldn't understand how somebody can make money, prices going down, because logically, if you say that in an everyday sense, it doesn't make sense, right? So be open-minded and then make a plan. Oh my goodness, the plan is super, super crucial. Now with Kairos Empire, we have a game plan in the sense that you've got the beginners group, then you move into the intermediates group, and therefore the masters group. When you reach the masters group, you can challenge yourself to doing a 10K challenge or a 100K challenge, where you're building from $100 to 10K in 10 weeks, or $1,000 to 100K in 10 weeks. And if you're able, the first person who's able to do that is going to be rewarded a $50,000 account for their subs to use. So it's all good to have a plan, you know, and we've tried to give you the framework and the blueprint that we've used, that people have used coming into the pipeline of this company and this team, and yielded great results. And also, the final thing is to take action. You know, a lot of people will say it doesn't work, and when you ask them, did they try? They do a trade? Did they copy and paste? They will say no, they didn't. But then how do you know it doesn't work? You know, so I would just encourage you all, you know, for you, the fact that you're on this call even says to me, fantastic, you guys have been very proactive. I'm excited to see, because it just means you have the building blocks to becoming a very successful trader, which is always, always exciting to see. So yeah, that is it. That is it from me. Guys, thank you so much for letting me come and speak with you guys. It's such a privilege and an honor to me to speak with you guys. I've had such a blast speaking to you guys. I really, really hope that this was helpful. If there are any questions, do let me know. Do let me know. I'm happy to answer any questions that you might have.
Jen, thank you so much.
No problem at all.
Thank you so much. Like, so tomorrow you will be talking about support and resistance?
Yes. We're going to look at some charts. We're going to look at some charts. We're going to look at some support and resistance zones, doing some zone to zone markups.
Okay.
Cool. Do you know what? I'm going to hold up. I'm going to, because the last time, let me stop this recording, because the last time I did this,